Let's give you more on the solar stocks. Of course, we discussed the fact that they are down sharply this morning. That in reaction to the Senate version of President Trump's big, beautiful bill and the spending cuts that go along with it. Let's get over to Pippa Stevens, who has more for us. Pippa.
Hey, David. Well, clean energy stocks are getting crushed as the Senate's version of the tax bill would also eliminate or scale back many of the key credits that have been instrumental for the renewable energy industry. And residential solar is the hardest hit, with the lucrative 30% tax credit expiring 180 days after the bill's enactment under the Senate's version, which is sending Sunrun cratering some 35%. Guggenheim calling the move disastrous for the industry. Now, Enphase and SolarEdge, which make hardware for Resi systems, are also dropping here. The 45X manufacturing credit that benefits First Solar was left largely unchanged, but those shares are also under pressure on expectations that the industry as a whole will slow. Now, there are a few positives. The Senate's bill has a slightly longer lead time for projects to begin construction and still be eligible for the credits. And there's also a slower step down, with projects breaking ground in 2027 still receiving a 20% credit. But the credit would expire in 2028, which is 4 years earlier than what's in the Inflation Reduction Act. Now, ahead of the Senate Finance Committee proposal, investor expectations had been rising that the Senate's version would be more favorable than the House's. So clearly a lot of disappointment here today among investors. Guys?
So, Pippa, what does the industry do? I mean, do they lobby? How do they pivot?
Well, for right now, it's wait and see. And I think that's really the issue, is the uncertainty. And so you can't really start building your projects if you don't know what your finances look like. However, I have heard from some people that the industry should be able to stand on its own 2 feet, and that it can. And actually eliminating these incentives and the uncertainty they bring would show that the LCOE is actually competitive for solar. And then finally, when you look at the growing energy demands across the U.S., nuclear is not until a 2030 and later story. You can't get a gas turbine until 2030. You really can't build new coal. And so the only option here really is solar and storage. And so even though these credit expirations are not favorable, this is the best bet when you look at trying to build new energy infrastructure. So I think there is some sense that once we are behind this and once there is clarity, then the industry can get back to building.
Yeah, worst day for the TAN, the solar ETF, going back to last fall.